Alright. How much was the demo? Okay, you've not closed it. You've not closed it. You would have made money when it got here very early, but it has come out. It would have reduced. Where is it? This is it, right? Okay, you've not closed it. Where is it? Okay, no. Yes, 34. My God, this is the amount you are making. So let's close it. Boom. Now, guys, can you see? For $100 that we opened though on Friday, through analysis. Yes, just 0.01 lot. The reason why I closed it was because it's not looking like it will sell down further again. So, mm, so currently it's buying now. Yeah, yeah, it's- okay. Okay. Wait. Mm-hmm. Okay. Mm. I still don't get. Mm-hmm. Yes. Mm. So when it breaks, did you wait for confirmation for closure of that candle? On what time frame? Oh yeah. So what instruments were you using? EU. Okay, let's go. You should have what? Okay. Yes, yeah. Living, 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 living. It's fine. It's fine. Living, living. Okay. Okay. EU. Actually, he knows all these things. Yes, he's good. So just living. It's not that he's even playing. He's analyzing too. So, so where where was how did you how did you oh right. Yeah, so where was the point you did the analysis? Was it on 4 hour? Okay. I should come to you, right? AURUSD. So this is AURUSD. Okay. Will you be able to see it? I should go back. Mhm. Okay. Yeah. What will allow you to put a trend line to a price action? Yes. What will prompt it? A market structure. Uh-huh. So if you say my okay. Uh, like you want now, yeah, right? So where is the starting point of this? Where is the starting point? Are you talking about this sell market structure? Okay, this is the starting point. So if you take your channel and link it from here to this point, right? And draw it straight into the picture. So bring it down to the base. So this is the channel, right? Hmm? I still don't understand it. I should take this off. Yeah. So if you are still somewhere there, then this is so it is this channel we are looking at. So this is the channel we are looking at. So you and now because this is what we are looking at, not this one. If it has not broken out, yes. You still don't get. Mm. Okay. 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 Is it that you use this? And use it on flowers and it worked. It cannot work because of you are not subscribed to it now. It's only if you are using daily. It cannot work. Oh. It cannot work. Okay, okay, okay. Express are okay. Mm. Okay. Ma? The tray? No, no. I'm currently on the drawdown. Mm. No, not yet. Yes. No, no. No mistake. Mm. Yeah, it's still within the buy. Yeah. It's still within the buy zone. Yeah. So, but why am I not seeing the rest? You cut no, the one at the back. Okay, no, it's fine. So it's Thursday. Okay, let's say this is what we are having, right? So we can see that market is what going up, right? And it's retracing at the moment. So what will you do? You take your Fibonacci. No, you don't know the end. You still don't know the end of this retracement yet. Abina. So you take this and you place it here. Please, are you following? Mm. Let's do the setting of this guy. 0. Mm. Hello. Hello. Oh, okay. All right. Uh-huh. Very good. Very good. Okay, great. So the background. You said the it's yes. Oh, font size, text, label, name. Okay. So we don't call it background. Aha. So great. So minus 0.27. Very important too. Minus zero. Where is it? So let's just add it. Minus minus zero. Uh-huh. Let's change the color. All right. So now, this is it. Are we seeing it now? Now, this is your Fibonacci. Before you add your Fibonacci, you've been able to discover that why is this one showing certain symbol? Eh, Now, so market is going up from here and we are seeing a retracement. What will you do? You take your Fibonacci, you take your Fibonacci from the lowest point, right, to the highest point. To know at which this retracement is going to what? Get to. That is within this red line. Is that not so? So that it can further go up to this 0 and minus 0.27. Now let's see what happens. Is that not what you will do? Because you are not seeing this as an impulsive, and this one is happening as a retracement. So if this is the starting point, this place is expected to be seen as what? Higher high, and your higher low is about to form. That is the retracement. To know where it will be exactly. No, no. No, you are not supposed to draw the parallel line because you don't know at which the end of this retracement will get to. Because it is expected. Yeah. Because you are expecting that this retracement should come down to 50 to 61.8, and it is at what? 23.6 at the moment. So let's see. Where is next? Okay, where should I? This one. Okay, this one is one by one. Now, see. Do you see now? Market is still coming down. Are you following, guys? Now, do you see it now? Because you are expecting that this market comes within. So what are you now waiting for here? A bullish signal to now tell you that a buying momentum. So now let's see. Do you now see it? You are supposed to wait patiently for the for you to see a what? A bullish signal. Is that not so? Now let's continue. Let's see. Hmm? Okay. Do you see now? A green candle forming at where? 78.6. Are you getting it now? Now let's continue. Mhm. So why didn't this hold? Because it did not close above this Maribozu. So it's not certain yet if this guy is going to what? Hold. Is that not so? So whatever makes this guy come all the way down below this, they know that the market structure has changed from what? From a possible uptrend to a downtrend structure. Are you following? Now let's see. So you are not expected to draw your trend line now when you don't see what a market structure. You have to see a market structure before you draw it. Um, Next, right? Uh, Now, so this is showing as what? Equal what? Equal low. Abi, this is the starting point of our impulsive, but we are seeing this guy as our retracement, expecting to come to 50 and 61.8, and to now get a bullish signal to push back up. Welcome, sir. But now, this thing is now showing you what? A Maribozu. And what does Maribozu tells you? Maribozu tells you continuation. Do you get it now? This is a Maribozu now, and it continued Maribozu. One of the reasons why I called a buy on 4-hour time frame on gold is because I saw a Maribozu. So I'm expecting that that market should still go up. Are you following? Now this is what? An indecision candle at what? At an equal low at the starting point. Do you get it now? So now let's go and let's see if a bullish candle should close above this guy. What are we likely to have? What candlestick pattern are we likely to have? Do you get it now? Now let's see. But if it breaks it and close below this guy, then it's a what? Change of structure from a potential uptrend to a what? To a downtrend. Now let's see. Hmm. So we have a morning star, but this is a what? A weak morning star. So it is still likely for it to what? Go up. But I'm expecting that the next candle that must come must close above this what? This self candle to tell me that market is going to what? Move up further. Now let's see. Okay, it's still dancing. Okay. Now do you see this? Market has broken below the previous what? Low and close below it. No entry yet now. So you have to be patient. Hmm? Ah, great. Yes, now so we now have a candlestick. If I am to draw, let's say there's a zone here. If I am to draw this zone, how will you draw it? Let's say there's a zone there. Because we don't, we are not seeing the other. So now you are seeing this as what? As a breakout. Is that not so? Now this is acting as a what? As a retest. But if you see it, market is still within the what? Within the zone. So are you supposed to take a sell because there you can see a breakout? No. Even if this guy close below this guy and it is still within the zone, you are not expected to execute anything until you see a proper breakout from that zone. It has it has to break out completely outside the zone. Whenever you want to make decision to know the direction of the market, if market is still within that zone, you can't properly say that it has broken yet until there is a proper breakout. That is, if market is to break out from here, this guy has to come out very well to show that it is a breakout. So this is showing as a what? As a fake out. And we've gotten another what? Candlestick pattern here. What candlestick pattern is this? You can call this morning star or three inside of. Do you get it now? So that is, we are still having a what? Equal low. No change of structure yet. Now let's see. But with this has closed above this guy. I'm expecting this guy to go all the way up. This this candle, this Maribozu, bullish Maribozu, it has closed above this what? This previous red candle, sell candle. Because I'm not seeing this as the end of the selling momentum, which is now invalidated by this what? Three inside up. Are you following, guys? Now let's see. Let's continue. Eh? This red, yes, and this green has closed above it. Yes, yes. But currently, so I'm seeing this as a retracement. I'm expecting this guy not to close below this guy to make sure that market continues to go up. Okay. Mhm. God bless you. So at this point, what are you expected to say? Market is what? Ranging. So what will you do? Wherever the breakout now happen, it's where exactly now. It's still within the box. Now, do you not see it now? So are you supposed to make any decision now? No, no, you can't make any decision yet. So you are waiting for a retracement for you to now properly enter for the next impulsive movement to the downside. So you have to wait. So now you now have a what? A channel. Can you now see it now? You have a channel now. You have a market structure, a proper market structure now. And what is the market structure? Because this uptrend you were seeing before, it was a potential uptrend. We want to know where this retracement will get to at our 50 to 61.8, and it did not happen till it come down all the way to this point. Boom. Do you see it now? And market starts ranging in between. And you are even seeing this as a what? Bearish rectangle. That is the chart pattern. Bearish market is coming all the way down, boom, and it starts what? Ranging, and it continues the movement. So this is a what? Bearish rectangle. That is the chart pattern. So what will you now do? Take your channel. Take your channel. Draw it from this point. Uh, Take your channel. Draw it from this point to this guy. Is that not so? And now place this here. Good. Now you now have a what? A proper channel. So you take this off. Now I'm seeing a what? Is it an uptrend or a downtrend? Mm. Yes. Yes. Eh? I show it. 5,000. Else we show off it. Eh? So now so what do we have now? The starting point of this trend, then lower low, then this is referred to as what? Lower high. So we are supposed to have the next lower low, but market was ranging, but broke out. So we are expecting that now. What will you do here? You take your what? Fibonacci from this point. Are you following, please? To this point. No, now this is it. This is it. From this place, market is coming all the way down and it's retracing here. Is that not so? Now, when it's retracing here, it was moving down again. So you want to know at which point it's going to come down to. That is, I'm expecting this market to get to minus 0.27 from this point to this point at which the retracement happened. Are we following? Did it get there? Minus 0.27. Great. So this market retraced. Can you see it? Minus 0.27. Yeah. No, from up to down. This is a downtrend. That's how you place your Fibonacci. If it is an uptrend, from down to up. Have you forgotten? How do you place your Fibonacci on a downtrend? I still don't understand what you're saying. I don't understand what you're saying. From this place to this place. You draw it from here to here. These are downtrend. It's coming all the way down to this point. Boom. And started retracing up. So where is it supposed to be placed? Yes, this is the beginning of the retracement. This point. So you are now bringing your Fibonacci from this point to this point. No, no, I did not. Though. From here to this lowest point here. Now, from here up to this point, to know where this retracement will get to. Now, this retracement gets to what? 38.2. It did not come to 5061.8 before it now continues to what? Sell down further. And it sold down further to what? To 0, which is our TP1, and minus 0.27, which is our TP2. Eh? This is another impulsive. Yes. The, yeah. Exactly. Do you get it now? Which is supposed to, but it respected at 38.2. Do you get it now? So the next impulsive movement will now start from here because market is coming all the way down. So let's see what will happen. You are waiting for another retracement. So don't worry, just follow. Now you've not made any execution yet. You are just following the market. Now, do you see? It respected this guy. The support of the channel. Abby? So next. Okay. Now great. So do you not see why you need to wait for a retracement first before you enter? Because this impulsive movement is still what? Is still going further. Do you get it now? Okay. So what will you do? God bless you. To this point. Because a retracement is occurring now. So what will you now do? Fibonacci from this point to this point, in which I'm expecting myself within this place, that is within 50 and 61.8. So you now You are working with all the whole market structure. So you are expected to enter the next movement from your what? From the end of that retracement, using your Fibonacci to now follow the next impulsive movement. You want to buy. You can do that too if you want to, but that is very risky. Uh, so now let's see. Now do you see? Market got into our what? 61.8%, right? In between. But we've not gotten a bearish signal yet. But it touched it and rejected. Okay. So what do we have here? Bearish engulfing. What have I done? I pressed the wrong thing again. So can we undo? So we can't be able to see it again. Uh, so how do you do it? But we drew a channel now. It was 2024 July. Is it this place? Yeah, yeah. So this one, Abby. Mm-hmm. So boom. Okay. Now, mhm. Now see bearish engulfing bar. Yeah, after it has touched the what? So what do you now have? Okay, from here to this point. So you have a setup here now, expecting that this market come to this point and to this point. So once you enter a sell, you come down. So you come down to 15 minutes time frame. I hope it will not change. If I change the time frame, so this is the setup. Short at this point. So stop loss will be above that liquidity on your 15 minutes time frame. Eh? 30. This point. You can if you place a sell limit here, it will activate and it is selling. But because me, I do wait for confirmation first to know that markets really want to sell from there. It's not late. So this is the setup because it's still expected to sell down to this minus 0.27. But so let's say this is our setup and I've entered a sell here. Now let's continue and see. Okay. Mm. You can do that too. Eh? You can do that too. You can do that too if you want to. But you are looking at your what risk to reward ratio. You are looking at your risk to reward ratio. So uh now let's say we've entered a cell and our TP is this 0 and minus 0 to 27. All right, so let's see. Boom, boom, boom. Do you see this market got to 0? Do you see it now? It's sold. Yes, it got to TP1. But you are monitoring it now, so it's so you take it out or you take partials. Yes, and your stop loss is still above. So let's continue. Okay, now don't take us out on TP and even on LCL too. So that is why your stop loss is above that liquidity. But this is not a good risk to reward ratio. But the risk to reward ratio is 50-50. That is 1:1. You can do it like this too. It's fine. And now if you lose, it's fine. And if you gain too, at least you mitigate your loss. So next. Uh-huh. How I wish we were able to see the 15 minutes. This is it. Once this forms, boom, you're expected to wait for 15 minutes or 30 minutes candle for you to know the entry point. If you're able to come to 15 minutes to 30 minutes, we will know that we are not, it will show us that we are not supposed to enter now. So, uh, but overall, this market is still in a what? In a downtrend. In a downtrend. So I'm still expecting this market to come all the way down until this until it invalidates this downtrend. Yes. So mm, now 4 hour time frame, market is what outside, and I told you that whenever a breakout happens, what happens? Yes, another trend is responsible for that breakout. So what will you do? You take this, place it here to, to this point. All right. Did you get that now? So let's continue and see. This is very tricky. Mm. This is very tricky. Yes. So now, do you see this now? Boom, boom, boom. A breakout happened, but it came back inside. So this is now referred to as what? We need to see our other stuffs, our zones. Uh, so we need to. We are actually supposed to see all these things. So we can add it together with this, because using this as just the, what if there's a zone here? So I now have to adjust this again. but this market is still moving within a what? Within a downtrend. We can't effectively analyze this thing if we don't have our other stuff there. But that is how a downtrend work, or that is how a market structure work. Like the way we did it, that is how you follow it. Okay, so all right, all right. Let's see this. Now this is your DXY. So DXY is currently on what? On an uptrend, but uh, EUR USD is currently uptrend, right? So there is going to be more of what? Buying pressure than selling pressure. Not that markets won't sell, but more of it will be a what? A buy candle than a sell candle. So now you can see this counter trend line. Boom. What you allow me to see this as a proper sell is if this what? Counter trend line breaks and it moves down to come and test the what? The support of this channel, and you start looking for candlesticks. That is why I have my what? Fibonacci from this highest point to this point to know where this retracement will get to. It got in between what? 50 and 61.8, and it is respecting currently. Is that not so? Now let's come down to 1 hour time frame. Now on 1 hour time frame, what can you see here? What candlestick pattern is this? Inverted hammer. Inverted hammer, no. Shooting star. Inverted hammer is a bullish signal. This is shooting star. Now I'm expecting that this market still further what? Come all the way down. But this could be responsible for a what? A change of this sell behavior to still allow this market to go all the way up, because the overall is what? A bullish signal. And there's a breakout from this zone. So this market is currently what? Ranging. If you can see it, higher high, higher low, higher high, equal low. Now this market is going again. So what will I do here? If you know the market is ranging, what are you expected to do? See? Boom, 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 and now it's going again. So this market is currently ranging. You said? This is what I'm saying. So there's a breakout, Sabi, at this point, but market is still in between. But this trend line is guiding this uptrend movement. So if this should continue going all the way up and break out again, I'm expecting that this market continues to go up to our what? To our next zone. Because if you can see, from this zone, there was no breakout until this place. When market broke out, it came back again and started dancing around the zone, but there's a what? There's a breakout already. It did not respect. This one respected when it got here. This one respected when it got here. This one respected when it got close to it. This one was supposed to respect, but it what? It broke out of it. And the rule state that if a market should what? Break out from a zone, it is going to the what? Going to the next zone. So I am expecting this market to come to this next zone here, intersecting with this what? Resistance of this uptrend channel. So markets could keep going like this. Till it gets to this zone. Boom. Are you seeing it? And this is still respecting. To guide the trend of this channel. Are you following? All right. Yes. Currently now. No, I'm not entering now. Yes, now. No, no, no. You wait. You so one as once you are waiting here, once you are waiting here, you check other pairs for any other what possibilities. You understand? Once you don't get confirmation of your entries, then you check other ones, but make sure that you don't have too much pairs. Don't have too much pairs. Yes. Yeah. So, I some of us have our system, right? And I told you that we are going to be doing the practical today. Yes. Mm. Do you have, nobody has it. You did not bring your own. Okay, so please bring your system tomorrow. Everyone, please. If you have a system, bring it tomorrow. For those that don't have, so we will, so that we can have enough system to do this practical. Please, it is very important. Though. Mm. Yeah. So, all right. Yeah, make it a one true. Mhm. So yeah. So now we'll be doing Elliot wave theory today. Elliot wave theory is quite technical and complex, but you need to listen attentively to this, please. It's very, very complex. Reason being that it is subjective. You just need to know the you just need to know what it entails. Then after you know what it entails, for you to now discover it on the chart is very, very subjective. So that is why it is complex. You might be seeing it this way, another person is seeing it another way. Do you get it now? So please just listen attentively so you understand what it entails. Um, Yes, sir. Eh? Oh, yeah. So, when someone call adjust stop loss, 330, 3305. Could touch stop, could it touch initial stop loss gan? Eh. But mo ti ní kó adjust ẹ̀ sí 3305. Then you now open another position at 3315. That is the stop loss area. The initial, the previous stop loss. Yeah, it's going up. Now, what do we refer to as Elliot wave theory? Elliot wave theory is derived Elliot wave theory is derived by a man named Elliot wave theory is derived by a man named Ralph Nelson Elliot. Now, and he postulated this theory looking at the market because he was able to discover that the market moved in a kind of repetitive manner. And when we say repetitive matter, that is a repetitive pattern at which investors see the market from prehistorical data to date and into the future. So Nelson Elliot postulated this theory and said that investors look at the market as a point at which there is a repetitive wave. At which there's a what? A repetitive wave. In such a way, that if there is a wave like this, it is very affirmative, or it is very likely to form in the future. What does that imply? It implies that for you to now see a wave in the market, you need to understand how it is being formed, so that when you see it the next time, you can be able to predict the movement of the market using the wave theory made by this guy. Do you understand now? Great. Now, so this implies that market moves in what? In waves. Markets moves in what? In waves. We all know how a wave look like now. So the wave can be to the upside, the wave can be to the downside. The wave can be what? Can be on a straight line too. But it what? It continues in that what? In that wave form. All right, great. Please, you need to know this. Hmm. So Elliot wave theory gives a precise identification of where market is most likely to what? To reverse or continue. Let me say that again. So Elliot wave theory gives a what? A precise what? Identification of where market is about to what? Reverse or what? Or continue what? Trading. Do you get it now? So before you now go to Elliot wave theory, we need to understand what fractures are. There's something they call fractures. Are you following? So please just follow. So fractures, what do we refer to as? What is the pronunciation of this? Fractals. Uh-huh. So what do we refer to as what? Fractals. Now, fractals are structure that can be split, that can be split into parts. Please follow, comma, each of which is a what? A very similar copy of the whole. Now, so I said what? Fractals are structures that can be split into what? Into parts, each of which is a very similar copy of the whole. What does that imply? It implies that for every Elliot wave that you see, eh, there is another smaller Elliot wave within it. That is that is what we refer to as what? Fractals. That is, there is a smaller part of a bigger structure you are seeing inside that bigger picture to now see what? A small movement of the big one, which implies that if you see a wave happening like this, in between it, there's another wave happening in between this guy you are seeing. If you can remember, I gave you an explanation of market moving in an impulsive movement, and within that impulsive movement, another structure is happening. So that structure you are seeing is referred to as what? Fractals. In between a bigger what? Structure that will happen. Are we following? On a smaller time frame. Yes, and it can continue to form like that on a bigger time frame, but it will be what? It will be very big. So that is, if you are seeing this on a bigger time frame, that is, you can also see another what? Fractals of this guy moving again on a very big time frame, and the movement continues. Don't worry, you will understand. Now, don't forget, what are fractals? Fractals are structures that can be split into what? Into parts, then each of which is a very what? Similar copy of the what? Of the whole. Welcome. Yeah. Of the whole. Are we getting it? So we are treating Elliot wave theory. Let me clear this. What is Elliot wave theory? Elliot wave theory, yes, are waves. Is that not so? That shows what? Repetitive what? That shows repetitive what? Patterns of where investors are what? Are placing demands and supplies in. You still understand that now? That is where investors are staking their money. I'm redefining it again in a way I can make you guys understand much more better. But it's still similar from the first explanation I gave to you. So waves, Elliott waves will tell you the repetitive what? Pattern at which what? Traders are what? Are seeing the market to move, in which it is to repeat such pattern in the future. So, and I said that there is a man that postulated this theory, and his name is what? D- Ralph, yes, Ralph Nelson Elliot. So he was able to postulate this, and at the end of the day, he discovered that yes, market moves in what? In waves. So if you as a trader, you are able to identify those waves, you can be able to know when market wants to reverse. You can be able to know when market wants to start another impulsive movement to the upside. You can know where market wants to continue. Do you understand now? All by what? Understanding Elliott wave theory. So you are not just using this alone, you are using it alongside with other what? Elements of technical analysis. All right. All right. Yeah. Yeah. Now, let's continue. You've understand what Elliot wave is. You've understand what fractals is. Is that not so? Now let's continue. Now, Mr. Nelson Elliot, okay, I should write. Mr. Nelson Elliot now said that for a market to be trending, please listen. If a market, if a market is to trend, we all know how market trends now. If it's trending up, we have higher highs, higher lows. If it's trending down, it will have lower low, lower highs. So it's not saying that if a market is to trend, market moves market moves in what we call five to three wave pattern for your overall impulsive wave. Please take note of this. Now, it further said that if a market is to trend, that is, if a market is to go uptrend or downtrend, market needs to move in what we call what 5 to 3 wave pattern for your what overall impulsive movement. For example, if you have an impulsive movement, boom, that is within, please listen o, within that impulsive movement, you are expecting a what 5 to 3 waves pattern form inside of it, which will become a what a fractal. You will be able to see it in a smaller time frame effectively. Is that not so? So 5 to 3 what 5 to 3 wave pattern. So what are the 5 to 3 wave patterns? You need to understand what those 5 to 3 wave patterns are. Is that not so? Now, is there any confusion or we are following? Okay, now let's continue. 5 to 3. Now, the first 5 wave pattern, I need to clean this up. Okay, let me continue. The first the first 5 wave pattern is called impulsive wave. Impulsive wave. The first 5 wave pattern is called what? Impulsive wave. The last 3 wave pattern is called corrective wave. Please take note of this. The first five wave pattern is called impulsive wave. The last three wave pattern is called what? Corrective wave. That is, after the first five wave pattern has formed, that is within, that is why they call it what? A 5-3 wave pattern for your overall. Is that not so? So if the first five wave pattern is being formed, boom, it is called what? An impulsive wave. After that five wave pattern has formed, the last three that are formed after it is now a what? A corrective wave for your what? Impulsive wave. And after it has formed, the next what? Impulsive wave will what? Will happen. And it continues that repetitive what? Manner. Are we following? All right. Mm. Mhm. Mm. Yes. Okay. Yeah, you will understand now. You understand now. Okay. No, ranging market has its own wave repetitive manner, but this is based on what? On a trendy, that is either an uptrend or a downtrend. Yes. Okay. You say? We will do that. We will do that. I'm coming. I'm just trying to. Okay. Mm-hmm. So you've gotten this now. Everything from here. Market move in a trendy market, 5 to 3 wave what pattern. All right. Then impulsive wave. The first five wave, this five wave is called what? Impulsive wave. Now the three wave, the last three wave pattern is called your what? Corrective wave. So let's take note of that. Let's continue. Oh, what will I do? That's where we are currently. Probably the second one. Oh. Now, now, in the pattern of your 5 to 3, now I gave you, I said that your wave moving was 5 to 3. Is that not so? Now, in the pattern of that your 5 to 3, wave one, comma, 3, 5 are motive. Wave 1, 3, 5 are motive. That is, it goes along with the overall trend. It goes along with the what? With the overall trend. Okay. So why wave, which ones are omitted here? 2 and 4 in between, Abi. Wave 2 and 4. Hello? Wave 2 and 4 are what? Are retracement. Retracement wave. Or or you can call this retracement corrective, Abi. Corrective wave. So wave 1, 3, 5 are what? Are motive. That is, motive means that they are moving in the same direction with the market, with the trend of that particular market. Which wave 2 and 4 are what? Are retracement. Retracement. Okay. So wave 2 and 4 are retracement, that is, they are corrective wave. Are we following? So let's, if you will understand all these things much more better, let's just continue. Now, guys, now don't forget initially I said the Elliot wave theory move in what? 5 to 3. Is that not so? So we've not touched that 3 yet. So we are currently on that what? On that 5. So I now said that that 5 that we are seeing, it has motive and what? Retracement, in which the motive of that 5 is at the impulsive movement of 1, 3 and 5, and the retracement is at what? 2 and 4. What does that implies? Now look at this. It implies that whenever you are, please look at the board everyone, when you have a starting point, boom, Elliot wave theory make us to understand that for a particular market to trend, in that trend there is a what? There is a 5 pattern movement. Forget about the 3 now, we will talk about the 3. There is a 5 pattern movement, in which that 5 pattern movement, you have your impulsive, that is the motive of that. Now let's say the motive of that particular trend is to the upside, so the motive will be 1, boom, this is 1. So for you to have the next one 2, it is a what? Retracement wave. 2, boom. For you to have the next movement, which is 3, it is a what? Motive. And it is expected to break above this guy, break of market structure, to give you a new higher high. Is that not so? Do you not see? Please, sorry. Hello? Hello? Yes. Yeah. Alpha. What I play, you have to open another position. Open another position like this, like as if you want to enter a direct market. No, 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 leave it. So, like, it's as if you are layering. So everything will still enter profit back. So open another position now. The same way you open the first one. The SL will be the same place now. The same SL, the same profit. And you know the SL was at 3305 now. You know we've changed it to 3315 to 3305. Is that not so? So this second one you are going to open now, adjust the stop loss to 3305 and put the TP at the TP of that first one. Uh, so in that situation, and you've layered the. That's what they call layering. Ah, okay, okay, yeah, let's do that. And actually, I'm in a class, so, but let's do that. They will have to. Hello, hello, are you there? Hello? Hello? Okay, oh yeah. Mm-hmm. So, oh yeah, at your top right corner, that place you used to put your buy and sell. Oh yeah, just buy. Just press buy. Exactly. So you've entered another position. So now go and modify it. Modify. Oh yeah, put the stop loss 3305. Or do you know what? Let's bring it down a little bit. Put it at 3300. Then put the TP. Where's our first TP? 33. Let me check. 330. 33. 3330. Okay. Same thing with the F. Okay, yeah, put it at 33. Put this one at TP2, 3335. Exactly. Then modify. Exactly. Go back to the chart. Let me see. Okay. All right, it's fine. All right now. All right, yeah. Okay. All right. Yeah. So I'm currently in class. We will talk later. Okay. All right. All right. Thank you. Yeah. All right, guys. Yeah, let's continue. All right. I'm coming. We will continue. I want to check something. Okay. record. So area is going 50%. Okay. Ah. Hmm? Mm. That's changed by us. But I am waiting for it here. 330. 3307. 533. Now, eh, I will follow you, please. So, wave one, are we following? Wave two. So now this one is our what? Wave three, which is falling at our what? Motive. This is what Nelson Elliot postulated, oh. And you are going to see it in a what? In a repetitive what? Manner. In a repetitive what? Manner. Do you get it now? That whenever this wave form, it is still going to what? Form as a continuous what? Continuous market movement. So this is wave one, wave two, wave three. Now you are having the next, which is what? Four. Four is a what? Corrective. So you are expecting that this market was corrected all the way down. It corrects all the way down, wave four. And now the next one is what? Five, which is what? An impulsive boom to the upside. So you have what? One, three, and five as your motive for this trendy market. Then you have two and four as your what? So this is now telling us that for we to see Elliott wave theory in the market, this pattern will what? Will be forming. Now this is now seen as a what? As a what? As a fractal within a what? Another what? Another motive. So this will now be seen as what? One. Don't forget, this is one. Then all this will now be seen as what? One. In which you will now have your what? Your retracement as what? Two. This will be seen as what? One. Then you now have your retracement going. How will you now know the retracement of this guy to this guy? God bless you, your Fibonacci. This is now seen as what? Two. So if this is seen as 2, then no problem. I'm just giving an insight. So this retracement is the what? Is the A, it is the what? Theory pattern. You know, I said Elliot wave theory involves what? 5 to 3. So this is 1, 2, 3, 4, 5. That is, if this is to what? Correct, it's supposed to move in what? 1, 2, 3. Which is what? All of this O will now be what? 2. Now, let me return it back. If a market is to trend, market moves in what we call what? 5 to 3. That is 5 and 3 wave pattern for your overall. That is, if you have that 1, 2, 3, 4, 5, then the next wave you'll be having is your what? 3 as your what? As your correction, which is retracement for the O 1, 2, 3, 4, 5. Are you following? Then when it happens, the 3 wave is what? A, B, C. Let me get there, you understand. Do you get it now? So I'm just telling you that once you get your 1, 2, 3, 4, 5, and after you now have your 3 pattern, the next movement you will have is your what? God bless you. So which I'm now explaining here, that you have your 1, 2, 3, 4, 5, 1, 2, 3. Once it ends, it will come down to 50% of this overall trend, and it continues another what? 1, 2, 3, 4, 5 to the upside, which you have what? 1, 2, 3. So that is what we refer to as what? Elliot wave theory. And fractals. Fractals entails what? A smaller bit of the same thing that is happening in a bigger face. Is that not what fractals are? What is the explanation of fractals in your notes? Into parts, into smaller parts of the whole. Do you not see it now? Now we are now seeing this as the what? As the whole, in which within the whole, smaller parts are happening too that are what? Elliot wave theory. So if you can be able to know this, Elliot wave theory states that market moves in what? 5 to 3 wave pattern. So you are expected as a what? As a trader to be able to what? Calculate those waves. You now see where it's subjective now. The objective is that the Elliot wave theory move in what? 5 to 3 patterns. Now, where it now becomes subjective, and that is why it is very difficult. But the only way you can know it is when you what? Have on like enough screen time practicing. So you now start looking at those waves. Okay, 1, 2, 3, 4, 5, A, B, C. Then the next one, 1, 2, 3, 4, 5, A, B, C. Then the next one, 1. Yes. And you'll be able to know, with that, you could be able to know the circle of a particular price movement. Now, if you have, let's continue. You have 1, 2, 3, 4, 5, A, B, C. The next movement, 1, 2, 3, 4, 5, A, B, C. The next one, 1, 2, 3, 4, 5. Abi, A, B, C. So this is what? 1, 2, 3, 4, 5. Is that not so? Then you are having a big what? A, B, C. To take the whole movement out for the next market to now continue again. But within this A, B, C, another what? Wave is happening in between. No? Are you following? Exactly. So now for you to see this wave theory very well, first of all, you have to follow your top down. We've done top down analysis now. So from your top, if you are able to see an impulsive movement, that is another wave is happening within that impulsive movement, and how can you be able to see it? You come down to a lower time frame. Now, But you are after that every wave, you must have what? One, two, three, four, five. After the end of the fifth one, there's going to be a what? Like a major retracement. That is why I said wave one, three, and five of your impulsive movement are the what? Are the motive. But the two and four are the what? Are the retracement. Because this one you are seeing like this on an higher time frame is a O1. This one you are seeing as your ABC is another O1, which is a retracement for this impulsive movement on an higher time frame. But when you come to lower time frame, that's when you start seeing the fractals. Do you get it now? Please, are we following? No, no break. Oh, let's continue. All right. Uh, all right. All right. Now let's continue. Please, are we following this wave theory? I use it most of the times. Is in fact every time in my analysis. I use it. It, it does not. But where it looks difficult is when you are now trying to look out for it. Now I told you that it is subjective now. After knowing the objectives, that okay, the objective means that logic, what you need to follow. So now subjective now means that how you are seeing it as a trader. Do you not get it now? Because you can see, you might not necessarily see this wave two, which is the retracement, as a what? As a long retracement like this. What will help you? Your Fibonacci. Do you not see where Fibonacci now enters? Fibonacci will let you know that the end of this retracement is over. Where you see what? A candlestick pattern to tell you that the next wave wants to happen. You now count that as the number two because you know that number three will come out. Because Elliot wave says that for you to have a repetitive manner of that wave, it will be what? 5 to 3. In which that 5, you will have what? 1, 3, 5 as your impulsive, 2 and 4. This thing is just like a cheat code. Yes, because Elliot wave theory has been able to postulate it from his research that the market moves in what? In waves. And what are the waves? The waves are that once you have an impulsive movement of 1 and a retracement of 2, you are expecting a what? 3 and 5 before a big retracement happens. Is that not a cheat code? After the end of that 5, after the end of this 5, because there will not be a now let's continue now. So we've done. Yeah, we will still, we will definitely. We will see it. So even though you see it there, then you can follow the same movement. Of course. So just now, that's it. So that 1 minute is now like a fractal of what is happening in a bigger picture. Do you understand now? It's still the same thing. Market moves in waves. Smaller wave, bigger waves. Still the same 3 and 5. 5 and 3 rather. You say? Yes, it is. It can never, because yes, because it has been tested over the time. Market move in waves. In as much market moves in wave, it will follow this postulation. Of course. This is work in alignment with market structure. Do you get it now? It works. It works in alignment of you having a zone that is on a bigger time frame. It works in alignment. So in a situation you are able to discover that you are in your wave 4 and you now want to continue selling this guy. But Elliot wave theory will tell you that there's still what? Wave 5. Oh, calm down. Do you get it now? Market is coming, selling here. You've been able to calculate you have wave 1, wave 2, wave 3, wave 4. You now want to continue selling here because probably in this fractal, this guy has closed below a particular liquidity. But this is telling you that you get, but this is still telling you that we are in wave 4. So wave 5 can still happen. Oh. Do you get it? So the wave 5, now there are now some things you need to know about wave 1, wave 3, wave 5. It's everything is here. I've written it out. Everything is here. So I don't want to cluster everything. That is why I'm giving you bit by bit. So because this can be very, it can be very challenging if you don't understand it. Understand? That's why I'm trying to give you bit by bit so you understand these things. Then you now understand everything as a whole. Mhm. Now, now now there's something you need to understand about this wave 1. There's something you need to understand about this wave 2. There's something you need to understand about this wave 3. There's something you need to understand about this wave 4 up to the what? Fifth wave. We are still looking at what? 5 waves. There's still 3 waves too. But we are currently on the what? 5 waves. In which that 5 waves, we have 1, 3, and 5, 2, and 4. 1, 3, and 5 is your motive. That is your impulsive movement. Then 2 and 4 is your what? Is your correction. That is your retracement. Within that what? 5 altogether. Are we following? Then in higher time, that 5, you are still seeing it as one on higher time frame. God bless you. But we want to know what it entails. That is why we are seeing it bit by bit. In higher time frame too, is also creating his own wave. Oh. Do you get it now? Are you following? Great. Now, what do you need to understand in wave 1? Boom. We've understand up to this point. All these things we will still look at it in the market or in the forex market. But now we are explaining so that when we now get to the market, it will be glaring to you. Now, I said there's something you need to understand about what? Wave 1. Now, in wave 1, the initial market, the initial market movement, the initial market what? The initial market movement goes upward. Mm. Okay. Okay.